Welcome to Markets Now. I'm Michelle Rook along with Darren Frye, Water Street Solutions. Grains back to the plus side today. We're mixed over in the cattle complex, but mostly lower in the hogs. And Darren, we've had a couple of brutal down days in the grains. We came off session lows yesterday. And so today we're seeing a bounce. So was it technical exhaustion or is the market trying to put weather premium back in?
That's a great question, but I think it's some of both when it comes to corn. I think for the soybeans, probably more a technical bounce. We reached some downside objectives, and the market, I do believe, has more down in it, but we need to recover a little bit here on beans and maybe have a 50, 60, 70-cent rally from the lows that we saw yesterday. I think corn's a little different story. We started the recovery in corn, a week and a half ago and came up into the 3-day weekend. We did break hard after that, but we've recovered since yesterday's lows. And I do think that it is about technical reasons, but more so about weather. As these models, overnight, the GFS kept rain in for the second week, but we did see the European, the Canadian go pretty dry overnight. And I think that got things pretty excited to start the day.
Yeah, and then you had the drought monitor out this morning, and obviously that's showing that the eastern Corn Belt is starting to see some dryness, and in areas of the West where they've actually been getting some rain, boy, it's having a tough time eroding that drought a whole lot.
Yeah, some of the areas have gotten so dry. We've been dry since the beginning of the year in some areas. A lot of areas over the last 30 to 60 days have gotten drier. And so it's going to be important that not only do we see a pattern change, but we see ample moisture on a weekly basis. You can still raise a bumper crop if you get timely rains, and those rains that come on a timely basis are very sufficient. So I think we're going to need to see, half to 3/4 at a minimum weekly, better yet, an inch and a half. And we need to see cooler temperatures so we can keep those evaporation transpiration rates down. But I would say that the majority of the country, 90% or greater, is in really good shape. Yes, they need rain, and yes, we need it sooner than later, and we need it into the middle of June, or we're going to have a big problem. But if the rains come, I think then we'll take more weather premium back out of the market.
If it doesn't come, though, what kind of upside could we have, especially with the funds being as short as they are in a lot of the commodities sector?
Yeah, well, it just depends on what we want to factor in for yield loss, but certainly going into pollination, and the South's going to start pollinating the middle of June, and then we work toward the north. It won't pollinate till the end of July, let's say. But when we get into the heart of pollination around Peoria, I-80 corridor, let's say, that's going to be July 10th, July 8th, somewhere in there. We need to be pretty well watered 2 weeks ahead of that. And so we need to see this really turn around, no later than June 15th, June 20th, start building some moisture. If we don't, and we go into pollination on the dry side, then I think you have to say goodbye to 181.5 and start moving the yield lower. And then it'll just depend on how crazy the funds get, short covering. They want to build a long position. But we could have a serious pop in these markets as oversold as we've gotten.
Absolutely. And we also have some demand issues. We talk so much about supply, but we didn't have exports out this morning, but they've been running pretty dismal. And that's really kind of an overhanging concern for this market too, isn't it?
Yeah, I agree with you. We're not just trading the weather scare or a possibility of drought, reduced yield. We have to trade the demand side. And right now, the demand side, while good domestically, has been certainly suspect on the export side. And I'm hearing from some of my contacts in Brazil that the safrinha crop is just enormous. And maybe this 130, 131 isn't a crazy idea for a total crop down there, with safrinha being a good chunk of that. But we do have a demand problem. And I think exports, by the time we get to the end of August, beginning of September, we close out the balance sheet for the 22-23 marketing year. I think we could see the ending stocks move up over 300 on soybeans and over 155, maybe even 158 in corn before we even enter the next marketing year. And that'll have an impact on, hey, we can lose a little bit of this crop and still come out with a 1.8 to 2.2, depending on, what we carry in and what our production is.
Yeah, so it's going to be pretty volatile for the next couple of months here as we sort through all of these dynamics, isn't it?
It is. I mean, obviously, if it starts raining June 10th and it just gets wetter and wetter and cooler, then, it's look out below. But if we
Right.
see a little bit of moisture come in, but not enough, and then we go through a week of hot and dry, and then it comes back a little moisture, we're going to have a volatile and choppy market here until we know more. And that will be 2.5 months from now, getting out to the middle of August, knowing what grain field's going like, and hey, what is our crop size when we start getting the USD estimates. So we could have some pretty volatile markets for sure between now and then.
You bet. And I should have asked you when we were talking about demand, but what's your take on some of the importation of wheat and even soybeans that we've seen here recently coming into the United States?
Well, we're just, we have competitions priced way cheaper than us, and obviously Russia on the wheat side is a race to the bottom. But we've seen, and that's where our wheat's been coming from, is out of the EU, and we've seen some blending take place on the wheat side as well, and that's still going to put pressure on the wheat. I don't think we've reached a bottom in wheat. I think maybe in the next 45 to 90 days we could, but I think it's going to be out in the middle of summer unless we have a real big weather problem with corn. The soybeans and corn were just getting beat up on competition out of South America, and so that is a burden for our supply side of things, because it's only going to grow if we're importing and not shipping and not getting stuff on the demand side that we need. So it's a big problem.
You bet. So, just before we move to livestock, and as we speak, we're seeing corn come off of its highs, and we just want to maybe mention that we might be trading a little bit different midday run here in terms of weather, you think?
Yeah, I think what people have to be aware of is the GFS, which has been less reliable over the last, I'm going to say, 10 years than the euro, is favoring more of this moisture coming in. And we've had some of these pop up cluster storms that have dropped some pretty significant rain, like around the Kansas City area, southern Minnesota, even parts of Nebraska. We saw some pop up showers that we weren't expected to get in central Illinois and western Indiana yesterday, that some people had a half to 1 inch and other people got nothing, and some people got 3/10. But there was some rain around that we weren't expecting, and that's because the GFS is picking up on that. The other models are bone dry. So if we come in here into the noon runs and the GFS still has a lot of moisture, markets could break, and that's coming out
Mm.
right now. But 1:30 Central Daylight Time, you'll start seeing the European run. And if we see that go from dry on the Zero Zulu back to a little more moisture, then I think that's going to be hard on the overnight trade as we go into the weekend.
Let's talk about the cattle market. As you and I speak, we are seeing both feeders and lean or live cattle futures back up into higher territory. In fact, new contract highs for the last 5 days in live cattle, and we're into all-time highs in the June contract. But it looks like cash is pushing us. I'm hearing of 185 bids being passed up in the north.
Yeah, super wrong on this market. I've been looking for a top. Obviously, the market just keeps running higher. I did think we'd have one more stab higher, but today's bar is very, very strong. So it almost appears like there's more to go. When you hear people passing on really high cash offers, it's like, oh my golly, we're probably going to go higher, led by the cash market. So we are in a terminal wave, and that just means that when this is over, when it finally finds a top, wherever that is, we're coming down, and we're going to come down significantly. But right now, there's no price action that would say that's happened or is going to happen anytime soon. We're still looking up in cattle here for higher prices. A guy has to be aware that around this 173, 174 area of the August is a pretty good area that maybe could stall it out. Maybe that's all we got to do. But again, no price action to determine that. Look up for now.
And what about the hogs? We had a couple of days of really great performance, limit up on Tuesday. We had a gap higher opening and a higher close yesterday. Was it a V bottom? And why are we failing today, if so?
I think we might have one more push up here, but I'm not looking for the start of a big rally. I'm looking for this to be corrective. We had about a $6-7 rally, off the low. And, hopefully this isn't it, because I haven't gotten hedges on. Hopefully we have one more push up, but I am looking for like July in this 85 area to stall out. And then I am looking down. I think we have more lows to come. I think the Prop 12 thing's a big deal, and I think it's really hurt the pork industry. And so, and bearish pork. I mean, I don't know how else to say it. I hate to say that because I know a lot of pork farmers are way underwater. But I think we still have more down moves to go to complete the sequence. So this is rally to sell, and maybe that 85 area will happen again.
So you think yesterday and the previous day's action was maybe just funds covering their shorts and getting
Yeah,
rid of this oversold status in this market?
I do. It was a counter trend move. I was looking for a move. It was very sharp, very quick. Hopefully, it's not over. Like I say, I'm looking for a little bit more, but I am wanting to sell this 85, 86 area if we can get into that.
Okay, quickly, anything you're watching in outside markets right now?
Well, I've been trying to be bullish crude. It's been real difficult. It's been forever trying to make a bottom, but we are up strong today in the products and crude. And obviously, I'm kind of bullish the dollar for some type of a corrective counter trend move here up into that 107 area. The dollar's under pressure today, but I do think it's going to regain strength and move higher. And I just mentioned all the listeners, that's one of the other challenges for our grain markets is if we move the dollar up, 4, 5, 6% here over the next, 4 months, just makes it harder on the seasonals as we move into fall, especially if we have abundance of supply because the weather straightens out. And so I'm watching that as well.
All right. Thanks for joining us, Darren Frye, Water
Thank
Street
you.
Solutions. That is Markets Now.